Time for Tapping the Tape. Shares of Lyft zooming nearly 17% higher today. That's the biggest gain since November 2020. The odd thing about today's surge is that there doesn't seem to be any real catalyst. We didn't see a street upgrade. We didn't see any market-moving news. Worth noting, the stock is still 60% lower this year. Tim, you've said before you like Lyft over Uber. Here we are.
Well, I like it on a relative value trade, and I've historically liked Uber over Lyft, and I'm not just conveniently now flipping and said I got this trade totally right. I mean, you've lost a lot of money in both stocks, but if you look at Uber versus Lyft, it's outperformed by 60% in the last 6 months. It's outperformed by 35% in the last 3 months. And some of the updates we've gotten from Lyft lately indicate that their third quarter is off to a pretty good start. You're also seeing a better balance and availability on the driver's side, although ASPs have fallen. Some of their cost base is changing. And so this is the dynamic that the Street wants to hear. I just look at the relative value here. I'll tell you what, I would like to own both companies, but at this point, owning Lyft to me is the better place to be.
Dan, you just bought some Lyft.
Yeah, I did last week. And, you know, here's the thing. I agree with everything Tim just said here. Another theme out here is autonomous driving, right? And Waymo, which is an Alphabet company, you know, has a stake in Lyft. They have a partnership as they work towards autonomous robo-taxis and the like. And so what I'm trying to do is sift through some of these names right here where the baby's been thrown out with the bathwater a little bit. When I bought this stock last week, I mean, they had 50% of their market cap in cash. Now, the stock is obviously up 20-some% in that period of time, but I think their balance sheet is okay. On an adjusted basis, they're making money. I know that there's plenty of things to kind of, shake a stick at when you want to talk about a company like this is making money on an adjusted basis here, but I just think it's a bit washed out here. So I went into this as an investment, but trust me, people, these sorts of things can turn into trades, especially if you get big moves this quickly.
It just did. So is it?
No, I mean, let's see if I get a two-handle on it. Here's the deal, Mel. You know, they're supposed to have 20% revenue growth for the next couple of years coming off a very low base. I look at a name like this, clearly an acquisition target. I know that there's a lot of areas where, you know, the regulators are not going to allow acquisitions. I don't think this is a space where that's going to be the case. Could a Waymo buy a company like this in a heartbeat for like a $10 billion enterprise value? Be a rounding error.